Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Monday, June 16th, 2014. You're looking at a daily chart of the SPY, which mirrors the S&P 500. What we have here today is a continuing longer-term bullish chart for the time being anyway, but right in this area here, you have this little red bar. That was the down move from last Thursday. And then you have a couple of sideways days, and you're still inside of this high here. So here's the deal. Right now, if you have another day inside this red bar, I would look for some downward momentum, maybe tomorrow, and we'll see what happens. But for the most part, where would the downside be for the time being? Remember, we're not ready for the big break yet, the big break in terms of the downside and the market. So we're going to give the market the upside bias, if you will, because we're still weeks away from, the big cycle turn that I've got pinpointed. So let's just take a look at what our downside target would be here if we saw a couple of hard down days in the SPY or the S&P. Where would we look for some support? Well, now let's take it from a common sense perspective. Basically, we're not going to look for a ton of downside. So where would we look for support? Well, it looks to be in this area here. Okay, this is a level of support, all this sideways consolidation, okay? And then you had this breakout, right? Where's this breakout? Right here. It's about 189. What does 189 signify? Well, it's right on the 50-period moving average right about now anyway. So that's two reasons why I like the 189 area. And let's take a look at a third. If we take a Fibonacci retracement from this low here to this high here, okay, where does 189, 188.5 to 189 bring us? 50% retracement, 188.69 or 188.70 is what it is. So all those factors point to 189 being probably my maximum downside target right now. I don't even know if we get there. This is another area, on a down day or two, you might just stall out at 191, 192, and that would be it. So we'll see. We'll play it by ear, but nothing too stout on the downside target right now. This is a tough market to be short. You don't want to short a dull market. You don't want to short light volume markets. Anytime there's a light volume or dull market, we always give it the upside bias because it's easy for the institutions to push the market around with light volume. So that's where we are. Oh, by the way, I want to mention that this week, what do we have this week? So we have a couple things going on. We have options expiration. This week is quadruple witching options expiration. What that means is you're going to have a lot of manipulation by the institutions of the market. You're going to see stocks that are up go down. You're going to see stocks that are down go up. You're going to see the market do the opposite of what it should do. To add insult to injury, for example, on top of that, you have the Fed meeting this week. So it's Tuesday, Wednesday. So they're going to come out with an announcement on Wednesday. It's almost like a non-announcement because everybody knows the biggest announcement they can make is another, $5 or $10 billion of tapering on the quantitative easing program they've got. So maybe they'll buy $35 instead of $45 billion a month in treasury bonds or mortgages. That's about it. They're certainly not going to raise interest rates. They're certainly not going to stop doing what they're doing. And so on days like that, and here's where some of this common sense comes in. Days like that, okay, if you go back in history, there's been probably 80% of the time, maybe more, when the Fed gives their announcement, the market may whipsaw around for 10 or 20 minutes, but at the end of the day, and I really mean the end of the day, Wednesday, I'll bet you the market's up. The market will probably go up Wednesday versus down only because it just happens over and over and over again. And we don't have to overanalyze things. We use common sense in cases like this. And I'm not saying play the Fed announcement. I'm not saying buy anything into the Fed announcement as the reason to buy something. I'm just saying what to expect in the market. And to expect an up day on Wednesday. It's that simple. The Fed talks, up day on Wednesday. It just happens over and over and over again. And so when it happens over and over again, we pay attention. And so my bias for Wednesday is to the upside. The other thing, the third thing happening this week, it's really at the end of the week on Saturday, is the summer solstice. And what that usually signifies is a turn in the market. It's a turn similar to the full moon. It's similar to a lot of other things, the lunar cycle that we talked about a couple of weeks ago or last week. So the summer solstice can mark another turn in the market. So if the market goes down hard into the end of the week, I would think a turn is going to occur next week, and vice versa. If the market goes up hard into the end of the week, I would think next week maybe a turn. It's just something to keep your mind on. It's something to be aware of. I'm not saying that you play anything or you buy or sell anything as the reason because of the summer solstice. I'm just saying you need to be aware of it. Again, market turns happen around these times. I'm not making it up. You go back in history and you pick out the days and you could see more often than not it signifies a turn. So that's something to be aware of. Let's go over to the IWM real quick. I just want to take a look at the small cap index because it had some strength for the last, let's say, 7 to 10 trading days. You have a bullish pattern here, an up move. Now you have a bullish pattern, and I would expect if you get another few sideways days of consolidation, you probably get another up move. However, you're going to be hard pressed to come to beat this 118 area, even to 117 or 118, we'll call it. 118 to 118.50. You're going to be hard-pressed to beat that area. So we'll see what happens. It's possible, but I just want to make you aware that you're seeing some bullish pattern develop in the IWM. And remember, since we have a few more weeks until the big cycle turn, anything goes, you can certainly see an up market for the next 2, 3, 4 weeks. Okay, but I just want to make you aware that if the IWM is strong, the small caps are strong, I would think the rest of the market would follow, and the financials goes the same for the financials too. If the financials are up, the market's going to follow. If the small caps are up, the market's going to follow. Just things to be aware of right now. The members know which trades I'm putting out there. I've got my eye on a few, probably 4 trades right now, both long and short on some stocks. But these are the things that I look for in the overall market before I map out my trades to see what the probabilities are. Let's look at the bond yields. So we're going to look at the 10-year yield. The 10-year yield was down, like 3/4 of a tick today, nothing big. Again, you can start to see some down move here on the 10-year interest rate. And if we take a fib retracement, okay, just from this low here to the high, okay, you'll see, not cooperating on the chart here. You'll see that you're going to come into a 38.2 retracement here at 255 and about 250, let's call it 50% retracement. So those are in play in my mind if we continue down. On the upside, I still think that we can get to right here. This is a good area. I think we can get to 267 on the upside for now. We're going to go a lot higher later, but this is just for now. This is within the next week or so. That's when I say for now. That's short term in my mind. On the downside, I don't think we test this low, but if we do and we break 240 and we go down to 236, 237, 238 on the 10-year, back up the truck and short the bond market because that would be a dead-on trade right there. And we'll issue the members an alert at that time if it happens. Just want to make you guys aware of it. Let's take a quick look at the gold market. Here we go, GLD. And you've had a nice move. Where's the upside here? It stays the same. 124.5, 125. Huge ton of resistance right here. I don't think we go much higher than that right now. In fact, I think between now and the middle of July, you'll probably see some downward pressure in GLD. So that's something to be aware of. I don't think you should play it on the short side, but certainly when that occurs in a few weeks, I'm going to issue long trades in gold and probably gold mining stocks as well. And we'll play that one by ear. But right now, this is a no trade. We probably see some more upside momentum into the 124, 125.5. But there's not enough of a risk reward to take the trade because your downside is all the way down here and your upside is only up here. So $2 on the upside and probably 3 or 4 on the downside. So I'm not into that trade. Let's go look at the oil market, and I've been telling you don't short oil, still don't short oil. Geopolitical, I like to look at the weekly chart because it shows you exactly where we can go on a top in oil. Right here, this is USO. The crude price, you're looking at 109 to 110 on the upside right now. for 39.5 to 40 in the USO. And again, geopolitical, Middle East, you have Ukraine, Russia, you have Iraq, you have Iran getting involved. Who knows? We don't play that into the face of those type of things. However, there will be a time to short oil later on, probably sometime in July. Of course, the members will get the trade alert on that, and we'll probably lump in some oil stocks as well as the USO and that type of trade as well. Anything else I want to talk about? No, I think that's about it. I think you have to be patient here because it's a quiet market. It's a dull market. There are trades out there. The members are getting the trades, but I'm trying to give you guys in these public videos a sense for where the market is right now. And basically, we're just churning and burning. So I'll keep doing the updates. And thanks for tuning in. Common Sense Technical Analysis. I'm David Frost. I hope you're enjoying the updates. We'll see you on the charts.